Okay, we're going to look at 9-3B, divisional income statement and return on investment analysis. Okay, the E.F. Lynch Company is a diversified investment company with 3 operating divisions organized as investment centers. Condensed data taken from the records of the 3 divisions for the year ended June 30th are as follows, and there's the data. The management of E.F. Lynch Company is evaluating each division as a basis for planning future expansion of operations. So step 1, prepare the condensed divisional income statement for the 3 divisions, assuming that there were no service department charges. Step 2, using the DuPont formula for return on investment, compute the profit margin, investment turnover, and return on investment for each division. Okay. So step 1 is going to be creating a divisional income statement. So we're going to start with our company name, which is E.F. Lynch Company. Okay. For the year ended June 30th, 2018. So again, we're going to create a 3-column income statement. So the first one is going to say the mutual fund division. Okay, the next one is the electronic brokerage division. I'll make these squares a little bit bigger before I upload this. And then the investment banking division. Okay, so again, basic income statement. So we're going to start with our revenue, which in this case is called fee revenue. And our textbook tells us the revenue for each company, or each division, I'm sorry. So $4,140,000, $3,360,000, and $4,560,000. Okay. Our book also tells us our operating expenses. So again, just pulling the numbers out of the textbook. 2,980, 800, 3,091,200, and 3,739,200. So I'm going to take these and put a line there. Okay. This is going to tell me my income from operations. There are no what's the word I'm looking for? Service department charges. Our textbook told us that. So this final number is our income from operations. So we're going to subtract these two, our revenue minus our expenses. We get 1,159,200. 268,800 and 820,800. Okay. Now step 2 says that it would like us to calculate the return on investment, the profit margin, and the investment turnover. Okay. So in order our return on investment we find by taking our profit margin times our investment turnover. Our profit margin is found by taking our income from operating divided by sales times our and then our investment turnover is sales divided by our invested assets. So if we look at our mutual fund division, we need to know the income from operations, which is going to be 1,159,200 divided by our sales, which is 4,140,000, and we're going to multiply that times our sales, 4,140,000, divided by our invested assets, which our textbook tells us over here is 5,175,000. Okay, so if we grab our calculator, and we do the first problem, 1,159,000 divided or 200 divided by 4140, and then 3 more zeros, we're going to get 0.28 times, and then we do the next one. Sorry, I didn't do this math ahead of time. Which gives us 0.80. Okay. So then so this is our profit margin. And then this one is our investment turnover. And if we take those numbers and multiply them together, we get 0.224, which is the same as 22.4%. And this is our ROI. This is our return on investment. Okay? So we're going to do the exact same thing for our electronic banking division. We're going to take 268,800 divided by 3,360,000 times 3,360,000 divided by 1,120,000. And again, these two numbers are identical because they're both sales. Okay, this one is your income from operations, and this one is your invested assets. And this one came from our book. The other three came from up above. So again, we do the math. And we get 0.08. Whoops. Zero divided by and we get 3. And then if we multiply those together, we get 0.24, which is the same as 24%. Okay, again, this one is your profit margin, your investment turnover, and your return on investment. Okay, and then our last one is our investment banking division. So this one's going to be 820,800 divided by 4,560,000 times 4,560,000 divided by 3,800. Okay, so we get 0.18 times 1.2. And then if we multiply those together, we get 0.216, which is the same as 21.6%. Again, this is your ROI. This is your investment turnover and your profit margin. Okay? So then the last question says, provide a recommendation for the CEO. I'm sorry, I read the wrong one. Where am I? If available funds permit the expansion of the operation of only one of the divisions, which one would you expand and why? And I'm going to let you figure that one out. Okay? And the answer to that one is based on one of these returns based on all of those returns on investments. Once you're finished with this problem, then you may either go back to your PowerPoint if that's where you need to go, or you can move on to your assignment. Have a great week.